This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. On the show again today is Dan Ferris of Stansberry Research. Dan has appeared on this show, I think, at least 2 times before. We cover the gamut today: human behavior, COVID, the Fed, equity markets, liberty, speculative bubbles, meme stocks. We cover lots of territory. But there's a method to our madness, and ultimately, it is madness. Are we currently in some form of madness? I would say we are. You'll have to listen to see what Dan's view is, but I would say we're there. And you got to be ready for anything and everything, because who in blazes knows what's going to happen next? But the key, and I think Dan agrees with this, you will hear in a second, the key is you got to be ready for anything. Can markets double? Sure. Can markets drop by 75%? Sure. Are you ready? Yes, no. Do you have a strategy? Yes, no. That's the thought process. That's how you should be thinking. Without any further delay, jump right in with me and join my conversation with Dan Ferris of Stansberry Research. So here's where I want to start. This is something that I swiped from a guy that we both know of, John Hussman. This is from John Hussman's most recent write-up in January of 2022. And he says, we can project that the S&P 500 would have to lose about 70% of its value here simply to touch the run-of-the-mill valuation norms that have historically been associated with expected long-term nominal returns of about 10% annually. Then he goes on to say, still, nothing in our discipline relies on valuations ever visiting those historical norms again. Instead, we are prepared for anything. I thought that was an interesting write-up. I'm obviously not a guy that does the same kind of work as John, but I respect the fact that he systematically has attempted over the decades to compare fundamentals by the year, at least the way that he judges the fundamentals of the market. So it's a very interesting perspective. But then the trend following side of John seems to come out where he's like, look, this is where we stand, but we have no idea what's going to happen next, and we're prepared for anything.
He's a man of experience. That idea that he's prepared for anything and doesn't know what's going to happen next, I think comes from that. But I think there's a caveat in this. We're in such uncharted territory. One of his 5 measures that he uses to comment, as he did in the piece that you read, one of them is price to sales. We've never been here before at a price to sales of over 3 or whatever it is now for the S&P 500. So we don't know what that looks like. We don't know how it works out.
We know how we got here, though, in a way. I mean, we can look at the last decade of basically no risk-free interest income, and where do people put their money? And the crowd says we're putting it everywhere.
I mean, I get it. In total agreement, it makes perfect sense to me, but it's so weird. It's just so weird to be here. It's funny because I'm constantly telling readers, this is what it feels like at the wrong end of a highly speculative run. This is what it feels like when the market starts running out of steam. This is what it feels like when it's just too frothy, et cetera, et cetera. Yet the utter newness of it just smacks me in the face every day. You can know it. Feeling it is a totally different proposition.
I talk about trading strategies a lot. I talk about trend following, but the world right now, lockstep in unison, is using a trading strategy. Now, it's a very simplified strategy. It's called buy and hold, but they are using it. And it's just amazing that there's not more fear when the masses are so on one side together, especially if you just go back in the last 20 years and look at what can go wrong.
So as you and I speak, I think S&P 500 is 6% below the high. Yeah, that ain't going to do it. And we've seen we've seen minus 32 in the COVID crash, and we saw minus almost 20 in 2011, again in 2018. We know that folks, especially like 2018, they've got 2018 and 2020 in their rearview mirror. They're not completely unprepared, and they're so used to buying absolutely every dip of any size. You're right. There's no real fear. I don't care what any of the sentiment indicators say. We're still 6% off the highs, man. We're nowhere near a place where people are truly petrified yet. It's true. There's no concern.
Do you think that there's the possibility, and I spoke about this on a podcast recently, that the idea of Bitcoin and crypto, people getting used to that volatility of returns, is that transferring over potentially to equities? Or do you think equities, if things start to go down much deeper, people will get out? But crypto's been an interesting, brings back kind of the returns that you would have seen in the 70s and 80s and maybe even early 90s, where people were shooting for the gusto. How's that transferring over to equities, the mindset?
I don't know if I would say that it's transferring over, but I get what you're saying, and I think it's true. It's a common feature. It's this thing where the real hodlers, they call them, appear to have absolute iron conviction. But Mike, you and I both know at the top, everybody appears to have absolute iron conviction. Within 20 or 30% of the top of Bitcoin or Ethereum, any of the big ones, that's normal. Minus 80 or 90% is familiar to them. It's in fairly recent memory. I think you make a good point there. Part of that point that I've made too is that if Bitcoin is a new source of currency or a new store of value or anything like that, it sure as hell is not trading like one. And it may even be, I think it's around 40 grand as we talk. I don't really watch it like a hawk, but I don't know, just say in the 40s after the high was 69. Nobody's panicking about it. It doesn't look like panic to me. So they can take some volatility. I will give you that. I agree with your basic point there. I'm afraid that Bitcoin is a canary in a coal mine for the overall market, and that it could be down 40 or 50%. And people are saying, this is nothing. That's the way Bitcoin is. It's volatile. And it could be a precursor to a even bigger drawdown like Hussman is expecting in the broader stock market. That's my fear about it.
If we look at something like Bitcoin, though, too, if we think about who owns it, I know the ownership of most Bitcoins is concentrated in the hands of very few. They got in very early. So there is a tremendous number of regular Joes that have bought in at 10,000, 20,000, 30,000, 40,000. And the ones that were buying in at 60,000, they've sold their home now. So it depends on when people got in. And that's an interesting aspect of it, too, that is not talked about at all.
When people get in, boy, that's something, isn't it? I wrote a little piece in the Stansberry Digest recently about this. A fellow at a firm, I think it's called SL Advisors. His name is Simon Lack. So yeah, it's SL Advisors. He wrote a piece about how the average investor in Cathie Wood's flagship fund, the ARK Innovation Fund, the ticker ARKK, average dollar into that is underwater now. Because of course, what happens, everybody pours in their money at the top. The overwhelming amount of money comes in at the top.
Let me break this open too, before we bring it back to some market talk. The broader, where we are as a society, as humanity. Like everybody, I've watched the COVID thing unfold from most of the time a perch, except for 6 weeks, most of the time that perch in Asia, which has been a different perspective. But here we are now in 2022. What is your feel right now? I'm starting to have a bad feeling. Not a bad feeling about COVID or fear of COVID. I'm starting to have a really bad feeling about the people and players that are running the politics and the healthcare part of this. It's starting to feel like something is dreadfully off.
Every time you and I talk, we're always nodding at each other and saying, yeah. It must be so uninteresting because we tend to agree. And it's funny because my wife and I have been having this exact conversation over the last few days, ongoing here and there over the last several months, but really a lot more over the last few days, because for months and months, I've been telling her, don't worry about it. Things happen. It'll all work out. But now I'm going, wow, I'm starting to feel concerned. You could just take one thing that I would normally dismiss, like Australia apparently turning back into a penal colony, right? And I normally wouldn't worry much about that. But the voices here in the United States where I live are so strident. It seems that there's no middle anymore. It seems that way, but I don't know if that's just a feeling I get from watching television or if it really is the way it is.
I was thinking about the other day. Remember when this started and they showed us the videos out of China? It was a prepared video. Here's a shot here, a shot here. And it was people randomly falling down on the street dead in public.
I do remember.
Boom, fall, boom, fall, boom, fall. That was the opening salvo for COVID. And I think those images of people walking down the street, falling dead like Brad Pitt World War Z zombies, that set in motion, I think, everything. And that was clearly fake. That was clearly not real.
Yep, it was not real. And yet the political leaders of the world, they can't let a good crisis go to waste. They're running an experiment on us, and they found out that they can really get away with a lot more than I ever would have thought in the back of absolute nonsense. And I don't know if you saw a piece recently where Nigel Farage, I think he's former Minister of Parliament at this point, or maybe he still is an MP, I don't know. He did a Freedom of Information request and wanted to know how many people had died solely of COVID with no associated condition or comorbidity in the UK. The number was 17,000. And we know at this point, the overwhelming number of people, they're almost all older, virtually all obese or have diabetes or some other serious comorbidity. Politicians shut down the whole global economy for a period of time. We're still feeling huge effects from it, and we're still wearing masks and all of this other baloney, even though it appears that those early fears based on people dropping dead, like you're talking about, and the early fears that, oh, this was another Spanish flu, we're going to lose some huge percentage of the world population. And it's like 0.6% or 0.5% or something crazy, something tiny like that, which they're human beings. They're millions of people. I get it. But in the scheme of things, clearly the response was totally over the top and unnecessarily severe. And yet that point is just not made often enough. The narrative in the mainstream media is still beware, wear a mask. It's crazy. And I think that it's led to other things. It's led to this new surge of central control of our lives. And I am becoming concerned because that is a bad thing. This is the time, Michael, when people will begin to do things like call for strong leadership. And you don't want that. I think it was Elbert Hubbard who said, grown men don't need leaders. And they don't. They need to be left alone to live their lives. And as long as we have laws against infringing upon each other's persons and property that are strictly enforced, we'll be just fine. But we are way beyond that now.
Let me add a little more grist to that. I caught a clip the other day from Dr. Fauci. It sounded fairly innocuous, and it was a standard issue interview reply that he was giving, and he said something to the effect, and I'm paraphrasing, COVID's still out there. People are dying. People are dying. How we are not at the stage of the game where we realize, okay, this very learned man, he knows what's going on. He says people are dying. But then what he doesn't say, like what you just said a few seconds ago, is the who. And to even add some more specifics to your who on the comorbidities, America, 30% of the deaths had 10 comorbidities. 75% of the deaths had 4 comorbidities. So when I see a random, innocuous, seemingly pleasant interview from an 80-year-old plus man who is a doctor who says, people are dying. And he leaves out who. He leaves out who. He doesn't say who. At the same time, he wants all of these children to be masked up and vaxxed up nonstop, continuously. Why? Why is an average individual person, when I look at that and I know he's leaving out that information on purpose for some end that he is trying to get to, why should I not think that his action or he himself, that I'm looking at evil? Why is this not evil?
Why indeed? How have we missed this? How are we not all collectively remembering any horrendous scourge like Hitler or Stalin or Pol Pot or anyone? Pol Pot is in really recent memory, 60s. And that should be recent enough that we look at Fauci and say, this smells too familiar. We should be really guarding against this. But you don't hear the voices.
I don't think he wants people to die. But to use this one-size-all fist, and it is a fist, this one-size-all fist to take everyone down and to obscure information and to hide information and to make things very general and fearful. I'm just at the point where it's like, this is something bigger.
I would go farther. He maybe doesn't actively want lots of people to die, but he certainly doesn't mind terribly much and is certainly willing to use their deaths to further his own agenda.
I just saw in the last couple of weeks, it might have been New York or it was the entirety of America in general, but they came out with now, 2 years after they're scaring us with the 500,000 plus dead, the 700,000 plus dead. These are people that died because of COVID. Now they're being reclassified to having died with COVID, but not because of COVID. And that reclassification has taken 50% of the deaths, supposedly from COVID, off the table. They knew that. They knew that when they were doing that.
Yeah. I mean, your original question, we're in total agreement. I've become worried about my relative level of freedom and the degree to which I may be targeted by the state more than at any time in my life. I don't know if it's a function of turning 60 recently, Michael, but I don't think that. It certainly doesn't feel that way to me. I'm the one who's always trying to say, no. This is normal. But now I'm not saying that anymore. I'm really genuinely concerned.
We're all taking all these vaccinations and they clearly don't stop any spread. At some stage of the game, people got to say, hey, what's going on here?
We started out 2 weeks to flatten the curve or whatever it was. 2 years later, we're hearing that Israel says, 4 doses just didn't do it. Look, I'm not a doctor. I don't know anything about vaccines, but if I took 4 doses of smallpox or polio vaccine and I still got smallpox or polio, we'd be kind of wondering about that. And the truth of the matter is, of course, coronaviruses are nothing that you can vaccinate against in the way that you can vaccinate against those other things, because they've always been with us. They will always be with us. I think it's true. Like I said, I'm not a scientist or a medical doctor, but I think it's true to say that coronaviruses are just always endemic, aren't they? They're always with us. If you've lived as long as you and I have, you've had a coronavirus or two in your life or more. I don't know. I think they're playing us.
The reason I bring it up is not necessarily to go off on a COVID tangent, but as I set this conversation up, laying a case that we could be in that bubblicious time period. On top of being in the bubblicious time period, we have the social order and the way that people think, the way that people make decisions is completely upside down. And as you use that word strident, there's strident camps that are not communicating. We know markets are at all-time highs, pretty close to, a little bit off the top. And then we've got this situation where the average mind, because of nonstop fear and messaging and media and politics, we're building ourselves into a very odd state. Look, you bring up the point about liberty. If these things start to unpack and go the wrong way, strong men, they don't like liberty.
That's right. Exactly. Strong leaders, the first thing they do is reduce your liberty and say it's for your own good and it's the sacrifice you need to make to fix the problem. But of course, as we're talking here, we're identifying that the problem is, as real as COVID is, it's a made-up problem on this grand scale that's been created. It's not really as grand a problem as it's made out to be. And that's enough.
You're summing it up right there. It's been made out to be something bigger than it is. Look, I just spent the 6 weeks in the States and seeing the vast numbers and People can say, oh, you're making a sexist remark. I'm not making a sexist remark at all. But the vast numbers of women that I saw in America driving in their cars alone wearing masks was frightening. Frightening.
Yep.
Because I feel bad because we do know that when wars are fought, it's us crazy bastards, us crazy men that are out there, the blood and guts routine. And women, they have a different constitution. They have a different way of doing things. So for me, it's terribly sad to see that as a society, we have scared the blazes out of women.
Certainly, at various points in history, women fight in wars. But overall, the generalization is correct, I believe. I hear you.
Let me shift it into something else when I was...
Yeah, let's shift gears, man.
Well, it's all tied together. We're having a conversation about the decision-making and the human nature and the mindset. And all of these things are kind of tying us together in some kind of a weird stew that you and I have never seen in our lifetime.
Right.
Let me add a little more stew to it.
Sure.
The Federal Reserve. These are the folks, since the Great Recession, by as many smart analysts as I have seen, have been on a path to something that doesn't look like any type of systematic management of a central bank, but it looks more like pure politics.
Yeah, the Federal Reserve. Michael, this topic is, I'm on a merry-go-round with this. I can't get anywhere with it because for all the narrative, I keep trying to assess the mechanics. I can draw a straight line from the Federal Reserve's activity to the bond market because that's what the open market operations do. They print money and go into the bond market to affect their policy decisions. But even then, all they're really doing is buying securities from the, I don't know, at this point, couple dozen or 20 or 30 or whatever it is, dealers, authorized dealers. What happens then? What do? Well, they take $1 of interest-bearing security out of the market and put it on the Fed balance sheet, and they exchange it for $1 that doesn't bear any interest. And the thing is, most of that money just sits in reserve accounts at the Fed. It doesn't really do anything, and it certainly doesn't get spent in the stock market. So I've got that, and yet at the same time, all you have to do is look at a chart off the Fed balance sheet, and it's just like half of Mount Everest. It just goes up and up and up at this point. And we know historically, this has been a very bad thing. And I look at the situation, I think, well, they're not monetizing the debt, but effectively, I believe we are at this point because, yes, federal government is borrowing everything it wants to borrow and spending everything it wants to spend. Trillions and trillions since March 2020. Of course, the inflation numbers are responding too. 5, 6, 7% year over year monthly numbers recently, going back into the summer. Maybe we're finally here. Maybe like all my confounded inability to figure out the exact mechanism of the Fed, it's for naught because we're finally here. We're finally at the place where the spender is really spending that money. It's indirect, but it's getting spent. $1 trillion at a time, $1 trillion here, $1 trillion there. Pretty soon you're talking real money. We can see the effects in much higher single-digit inflation numbers. Boy, they said they wanted more than 2%, and they got it, didn't they?
Did the standard issue practices of the Fed to try and control inflation, something like was done with under Volcker all those years ago? Do we see that again? Do we see something like that again?
My answer to that is no way. Jamie Dimon brought this up when their last conference call, in the last JP Morgan conference call. He was saying, hey, we saw all this stuff where you were 200 basis points overnight or something, where the Fed hiked 200 basis points overnight. That's what Paul Volcker did. I remember that, implying that could happen again. And he said, I think the Fed's going to hike 6 or 7 times this year. Yeah, well, when you're at a multiple, I don't even know what the multiple is now, a few times GDP of debt, that's a lot different than when you're at 20% or less GDP of debt as we were back then. So it's a totally different environment. All this stuff about rate hiking. I was collecting for an upcoming Stansberry Digest. The Fed futures market is discounting maybe 4 rate hikes of 25 basis points, like 1%. Diamond says 6 or 7. Somebody else, the guy at Marathon Asset Management, said 8 hikes in 2022. It's baloney. The Fed jawboned so that they could get what they've got now, which they're at minus 6% on the S&P 500. If they can get minus 15 or 20, they won't have to do anything. The work will be done for them. They just need to beat the daylights out of the asset prices, and then they won't have to hike anything. And if they get minus 25 or 30%, like they did in March of 2020, then they'll be able to cut. They'll be able to send the bonds into nominal negative territory.
Well, and the thing is you and I are just trying to look at this and throw some guesses out. But ultimately, when it comes down to a strategy, I mean, look, I'm a guy that's talking about trend following. So in some sense, I would never put myself in a position to rely on any of these things. I mean, all we can really trust is the tape. I mean, the tape kind of tells us the truth. I mean, I bring it up is one of those things where you look at the world and you say, well, what is going on? What are some of the expected movements? What have we seen in the past? It's worthy analysis. But then the question becomes is when you start to do that analysis, you're like, well, gosh, I could have all the fundamentals in the world, but how in the world can I make a decision off that?
It's a funny thing about the fundamentals. I mean, I've been writing about Peloton since about 3 weeks before it went public in September 2019. And before it went public, I said, this thing's a loser, avoid it. And of course, it went from like $28 to like 150 or 170 or some crazy number like that. And now it's crashed back to below its IPO price. They're shutting down production because they just made way too many bikes and treadmills. So they're not making any more. And the stock, of course, got murdered on that news, as it should.
That chart is a great example to bring up because that chart is a typical chart. You talked in one of your pieces of writing a while back, when I originally wrote you, and I think we were talking about Tesla options and some of the meme stocks, up and down moves, whether it's in equities or commodities. This is something that's pretty typical. And I guess this gets back to my opening salvo of this conversation, is that people really need to take a step back and realize that whatever chart you're looking at often has a similar movement. It can go up big, it can come down big, at least for the ones that do. It can go up big, it can come down big. That Peloton chart, untold numbers of charts over the decades, it's amazing how similar they look. And they all look similar because guess who's trading them? People. People are all, in general, batshit crazy. And the psychology runs it all, doesn't it?
Right. The charts show that human nature doesn't change. Technology might change and fundamentals of various kinds might change, but human nature certainly doesn't change. People get way, way, way too excited about an exercise equipment company that claims that it's not just an exercise equipment company. We don't just sell exercise bikes. They had a slide in their early presentations when they first went public. Before they went public, in the prospectus, they had a slide that said, we are a technology, media, software, product experience, fitness design, retail, apparel, and logistics company. I mean, it's just baloney. It's pure baloney that they sell, and people buy it, and it looks like truth while the stock is going straight up like a ballistic missile. But eventually, the fundamentals will influence the ultimate outcome. It's that old Ben Graham thing. In the short run, the stock market is a voting machine. In the long run, it's a weighing machine. Peloton is a lot lighter than it seemed at the top.
To me, it always just kind of seemed like every time I saw some images or something, I said, well, there's some really attractive ladies exercising. This is something that's been pretty normal over time. Let me bring up something a little bit outside the box. I'm curious your perspective. I was thinking about this the other day. Conversations that I've had on this podcast. Venture capital. We can look at the equity markets and we can know what's going on, but venture capital is a little more, let's just say it's less transparent. And I think people don't realize, we hear these stories of the unicorns that are in process, they're germinating, they're coming soon, the next big one. There is a boatload of pension money that's just rolling around inside these venture capital firms. And that pension money is being thrown at, and we're talking just regular folks' pension money, firemen, teachers, etc. That's just been thrown at all kinds of stuff. And I think what's so interesting about the venture capital space is you wonder, how much are they really about after launching a great new company? Or, and I think this is true, or it's all about the fees. Because if you got billions and billions under management and it's kind of opaque and you really don't know what's going on, or the general public doesn't really know what's going on, and there's big fancy offices and big fancy names, etc., and you don't really have to show proof. It's an amazing industry that it seems to be built off. If we can get the billions under management, we're going to get fees and wham, bam, thank you, ma'am.
Yeah, The Theranos saga, Elizabeth Holmes' company, which turns out to be a total fraud, is instructive here. She was pulling investors in back in like 2010 or something. And it was right at the beginning of a big change in venture capital when due diligence went from like, I don't know, maybe 2 months or something to 2 weeks to 2 days, and now literally to a few hours. If you're the VC, the target will tell you, you have 4 hours to make a decision because they're lined up outside our door and they're all throwing money at us. Of course, when due diligence is 4 hours or something instead of 2 months, the outcomes are a lot different. And it doesn't surprise me that you're telling me pension funds are pouring money into this, because they famously are some of the last dollars into whatever crazy thing that is going on.
Years ago, I got introduced actually multiple times. And I think at the time he was running the Texas Teachers Pension Fund. And it was a combination of perhaps one of the dumbest people I've ever met and one of the most arrogant people that I've ever met. This government employee in charge of allocating billions to assorted funds. It's a completely different issue. All these things I'm bringing up with you today, it's all about like, where are the flagpoles for all these different things that are unfolding in society, being able to imagine the kind of stoic point of view. Can I imagine the worst case happening? And yeah, I can. But the people that run these pension funds, I'm not impressed at all.
Yeah, the connectedness that you're talking about, it's all connected. That's what you're getting at here. The connectedness is real. A really good place to look for that is the art market. You can see it when people get anywhere between tens of thousands or maybe even six figures for art that doesn't exist, an invisible piece of art, or six figures, a couple $100,000 for a banana taped to a wall that happened a couple years ago, or the millions of dollars and even tens of millions of dollars for little NFTs, non-fungible tokens, electronic creations that are just some very primitive little picture that is supposedly has this unique electronic identity and goes for 6 million or 69 million in one case dollars.
You've got blended into that world that you're describing with art. It seems like it's a combination of those folks that believe in collectibles like crazy and then just outright money laundering.
Right. There is money laundering going on. We know that in the art world. But it's funny, there's more apparent money laundering when the stock market is at an all-time high valuation than at any other time. Maybe there's laundering, but maybe there's also tax avoidance or other things. But just froth, just pure froth, some place to put money because you got so damn much of it that you didn't know you were going to make because the stock market went nuts.
As I lay out all of these pieces, somebody could say, well, gosh, you guys are having a little bit of a bearish conversation. Hey, look, let me be optimistic for a moment. Everything that we're talking about, I mean, would it surprise me if Bitcoin went to 100,000? No. Would it surprise me if the S&P doubled from here? Not at all. When you've got us humans involved in a process, anything and everything can happen. I think the trick is that if you can imagine Bitcoin going to 100,000, if you can imagine the S&P doubling, then you should also be able to imagine each of those, the S&P and the Bitcoin, dropping by 80%. It's the imagination part that seems to be lost on the public, not being able to imagine how far or how low something could go. Okay, if you do get to the point that you can imagine, what kind of strategy, what kind of mindset can you use to manage a world where you could imagine things going up this far, down this far?
That super wide range of outcomes that you're talking about is the definition of risk. And people are literally just blind to the other half of it. They can imagine Bitcoin going to 100,000. They can't imagine it going to 4,000 or something. But you're right. You can't have just one side of that. If you can imagine one side, you must imagine the other. That's totally true. I'm glad you brought that up. It's funny. As we speak, I'm preparing another Friday Stansberry Digest pieces, and I discussed this issue of imagination. And I was saying that I can imagine stocks like GameStop and Nikola and AMC Theaters going to zero because certainly their businesses are dying, or in the case of Nikola, I think they've delivered one truck. That's only recently, within the past month or so. Before that, it was zero. They barely had any product at all to offer. So I can easily imagine these things going to zero, but you look around and people seem to be, especially still with the meme stocks, GameStop and AMC, they're at exorbitant valuations for dying companies in dying industries, industries with decade plus long trends of secular decline. And yet they're getting multi-billion-dollar market caps still, even though they've been cut in half or more.
I look back to the dot-com era, let's say between 94 and 99, up until, let's say, March of 2000. I can still remember vividly the feelings that I had. And the primary feeling I had was, gosh, a lot of people I know, and I wasn't trying to say I was the next Einstein or anything, but a lot of people I know are not so accomplished. They're pretty youthful. They're not that bright necessarily, but the conviction they had on things going up, the conviction they had on how much money they could make, the enthusiasm. I'm not trying to draw a parallel to that time period, but it reminds me of that time period right now where everything's priced for perfection. There's a lot of COVID fear, but there doesn't seem to be a lot of market fear.
There isn't. There's not a level of sophistication. There's a simple-mindedness that assumes that we're going to the moon. There's actually a paper I found today. There were two folks from Emory University and two of them from Oklahoma State, and they did this paper in last February that was studying the difference in retail trader sophistication between Robinhood and other firms. And the Robinhood traders, their three most common FAQ pages that they visited on the Robinhood investor site were, what is the stock market? What is the Dow Jones Industrial Average? And what is the S&P 500? Versus on the other sites, the most common frequently asked question pages were like, what are stock splits? What are puts and calls? Just a slightly more elevated level of sophistication. And they showed also that the Robinhood folks, on net balance, I think we've got 12 or so million new of these folks since 2020, with out of maybe a total of 25 million new retail trading accounts. So a lot of really unsophisticated people. And they also showed that these people are more likely to herd. The Robinhood types are herding. I hear you, that everything's going to the moon. We're all in agreement. We don't know what the stock market is or what the S&P 500 is. I mean, it's just classic. It's absolutely classic.
I'm not trying to, and I know you're not either. We're not trying to say you're new and you're unfamiliar with things. I'm not trying to put anybody down at all.
No.
We're just trying to kind of like open eyes and say, guys, you got to realize, men and women, you've got to realize there are sophisticated players with massive pools of capital, with trading floors you can't even imagine, who are dying to take your money away from you.
Right. And part of their conviction, unfortunately, is that they can beat them because that's what we did with GameStop and AMC, isn't it?
That's the interesting part, is how many people sitting in their bedroom in their tidy whities think that they've got a better handle on it than that trading floor at Goldman Sachs in Lower Manhattan.
The script has flipped. The market was controlled by institutional investors for a while, and all the stuff you and I are talking about, now the institutions are turning around and saying, well, we need to follow these people. Now, JP Morgan has this new data product that they introduced last September, which follows all these individual investors all over social media. And they've got 50 clients, some of the biggest asset managers and quant managers testing this thing. It's like 85% of hedge funds, 40% of asset managers are now tracking retail trading message boards. And this firm out of Norway, the biggest asset manager in Norway, DNB Asset Management, they just tripled their stake in AMC, this dying, indebted piece of crap with a $9.5 billion market cap that has lost something like 70 or 80% of its revenues because people aren't going to the movies anymore. It's a completely insane moment. This moment as we speak, this is the moment we'll look back. We'll say, oh, yeah. Remember when Wall Street turned around and said, we're not in charge anymore. We're following you guys. And they're following the Robinhood crowd.
Our conversation today are these flagpoles or tent poles, whatever you want to call them, all across the landscape of these various issues. You and I, we're not bright enough to necessarily connect the dots and say we can predict what all this means, but we're just kind of like throwing out. Think about these issues. I'll give you another one. This happens to me all the time. I get emails from people, they want to gather information about trend following or whatnot. Invariably, I'll ask them, well, what are you doing now? I'm telling you right now, and I've never seen this in the last 25 years, 90% of the people that write me say they're trading 5-minute bars or 30-minute bars, 1-hour bars. This is globally. So I'm getting emails all around the world. I scratch my head because I'm like, okay, it only takes a slight amount of research, a slight amount of reading to realize what you're up against if you're going to try to trade those timeframes. But those people might not be doing that, but they're clearly being pushed, or they're clearly finding evidence that they think is real, that they can do this. It's amazing the lack of sophistication, the naivete. And I don't say that in a mean way, because a lot of these people seem perfectly nice. And some of them, I tell them, please run away. Don't do that. You're going to get clipped. You don't want to be going down that path. But it is amazing the optimism that people have that they can sit at their house and trade 5-minute bars against Jim Simons trading his high frequency shop. It's just, I don't know how people get there.
The unfortunate thing is they might meet with enough success. It's like sitting in front of a slot machine. You don't lose absolutely 100% of everything as soon as you put it in there. You know, they give you a few coins back every third or fourth pull to keep you in the game. But eventually you're right. It's insane to go up against the HFT crowd, because that's one place where the institutions are always going to have the advantage. They can trade microseconds, and those 5-minute folks can't do that. They just can't. You need to locate yourself next to the exchange and get a connection to it, and they don't have it.
That's an insider game. I got one final type thought for you. What keeps you motivated? Like, what keeps you motivated to be somebody who wants to look at the human condition, to look at markets, to look at government, political actions, healthcare actions, how all these things can dovetail together? Why do you stay motivated to keep trying to follow and analyze this grand puzzle that we all live in? What keeps you motivated?
Well, aside from my own personal situation, portfolio, life, etc., my mission that I'm highly motivated on right now, I'm 60 years old. I won't be doing this. I don't know. I might not be doing it another 10 years, but I kind of enjoy it. And who knows, I might still be here. But my mission probably for the rest of my career is what I'm getting at, is to get my readers through what I think is going to be a horrendous downturn. Once I believe we've gotten far enough through that downturn to get them back into the market in an aggressive way. I'm committed to that. I've been committed to it for a couple of years now, and I made it explicitly clear in a digest just within the last several months. I can't remember exactly when, certainly within the last year. And that's what I'm about. That's what motivates me. That's why I get up at 5 a.m. and come in here and look at the news and Bloomberg and all the rest of it, and read 10Ks and all the rest of the things that we do to try to fulfill that mission.
I don't know how any sane person with some modicum of intelligence cannot also be worried about the horrendous downturn. That doesn't mean they can predict it perfectly or anything like that. But given the thrust of our conversation today, all of the issues that we've put out, food for thought, to think that somehow or another, this situation that we currently exist in can stay at all-time highs where everyone gets to be rich for doing nothing. Back to your word horrendous. I just have a hard time imagining as well how there cannot be a horrendous downturn.
Ditto.
Yeah. We didn't even get into, like, I mean, gosh, you go walk around the streets of almost any city in any country, and the devastation that you can see in small businesses from COVID lockdowns is just heartbreaking. So many people have just been tossed essentially out into the street. Their business is ruined. At some point in time, the piper will have to be paid for all of that activity as well. And another tentpole to think about. But cool stuff, Dan. I always love chatting. We can go around the maypole and bring up everything under the sun. Do I scare you at some points in time with my conversations or my topics? Do you think, oh my gosh, Mike's about to go off the rails?
Absolutely not. I was bearish starting in like 2017, and I didn't get bullish until April 2020. By the end of 2020, I was bearish again. So now I'm concerned about society and liberty and life. I'm right there with you. You're not scaring me. I'm already there.
Dan, people can find you at Stansberry. Is there a particular URL or email address or anything if people want to reach out to you beyond Stansberry that they can find you?
Sure. You can go to stansberryresearch.com. If you click on About, then click on Our Team, you can scroll down and read about me there. You can also go to www.investorhour.com and listen to the podcast that I do every week. And that's free. Anybody can get that.
You've been very nice to have me on several times, so I appreciate that.
Yeah. You and I have had some fun together on these things.
Cool stuff. Let's stay in contact and watch how 2022 unfolds. Again, I'm not making any prediction. It has the feeling for being an interesting year.
That's a great place to leave it. Interesting. It's the Chinese curse. May you live in interesting times, and we certainly do.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.